viewers in New York to our audiences worldwide. I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. And we are waiting right now for President Donald Trump at the White House for what is becoming a daily briefing now on the coronavirus. We'll bring you that as soon as it happens. People are gathering, but he tends to be a little bit late. He was scheduled to appear just right about now. So let's go right straight to the markets with Taylor Riggs. So Taylor, not quite as violent, it looks like today.
A little bit better. Now we are seeing some swings, losses, gains, losses, gains. I think now we're back in the losses territory. When I was at my desk 2 minutes ago, we were in the gain. So we're sort of fluctuating all over the place. David, what I would say is this does feel a little bit more orderly. We used to think about 2 and 3% moves in any direction as being 2, 3, 4 standard deviation magnitude moves. Recently, as we've seen 5, 10% moves, 1,000-point swings on the Dow, for example, a 1 or 2 or 3% move feels a little bit more orderly in the meantime. Of course, now we're a little bit unchanged, fluctuating between gains and losses.
But the NASDAQ is really holding up. What do you think is going on there?
Yeah, I think big tech, this is their opportunity, right? I spent so much time in San Francisco, and there was so much negative sentiment about big tech. But look, big tech is increasingly trying to become a healthcare company. We see that as the Apple Watch, for example. So I think this is tech's opportunity. If they can partner with healthcare, if they can really start to help out the public, battle that misinformation, this could be perhaps their moment to really shine and come through.
But the violence hasn't just been in equities this week, it's also been bonds. How is the bond market doing?
Yeah, that's been very volatile.
Yeah.
I was reading a note ahead of an interview that I'm doing later about you have to get the liquidity issues in order to see any sort of small rally that we might be trying to get to within the equity markets. The Fed, of course, as you know, trying to help that out, but you have to start to get a point where we are not selling whatever we can instead of selling what we should be, right? And right now you're just selling whatever you can. That lack of liquidity there is causing that panic, and as you know, causes that negative feedback loop. If there is one point I could make about the retail investor, my wonderful producer Pete made this for me. I have the chart here on my terminal if we're ready to show it. All about peak bearishness from the retail investor. Almost 50% of investors on the retail side last week pointing to bearishness.
Right.
But then maybe perhaps you wonder if then that's a peak. Previously in the past, when we've seen these types of bearish sentiment, you do get a small lift in the equity markets, for whatever that's worth.
A little more orderly is worth a lot right now if we can get to that world. Thank you so much to Taylor Riggs. Investors are still trying to sift through all the potential stimulus information out of Washington. Neil Bradley is spending a lot of his time right now in the middle of the stimulus plans. He is the Executive Vice President of the U.S. Chamber of Commerce and its Chief Policy Officer. He comes to us today over the telephone. So, Neil, thank you so much for joining us. What light can you bring to the process of this stimulus bill?
Well, it's a work in progress, but time is of the essence. And so one of the things that we're communicating with the administration and leaders on Capitol Hill is that businesses across the country, virtually from every industrial sector, are beginning to face a liquidity crisis as revenue dries up. And if we want to avoid massive layoffs, then we need to do some quick actions to help them be able to continue to support their employees.
Well, when you talk about massive layoffs, we're already seeing some of them. In New York, I'll tell you, they laid off thousands of restaurant workers yesterday. I mean, when you say quick, it's got to be really quick. Can the government get its act together fast enough to save some of these jobs?
I think it can, and by quick, I mean we need action by the start of the next business week, by next Monday. And to do that, we're going to have to keep it really simple, right? So we're going to have to leverage the tools that we've known how to use in the past. That includes credit facilities out of the Federal Reserve to support lending by private institutions to businesses of all sizes. It also means a quick program that employers can access so that they can at some level keep paying the employees they have on the books that they would otherwise lay off. And whether that's using the unemployment system or another mechanism to do that, we have to utilize our existing networks of paying people to be able to help employers keep the employees they have.
So you mentioned both some help from the Fed there, but also help from the government in Washington. Let's talk about both of those. With respect to the help from the Fed, the notion that they would really open the discount window, lend directly to businesses to keep them open, is that in the works?
It should be in the works. Now, this is going to require legislative changes from what was enacted as part of Dodd-Frank, but it won't always have to be direct to business. Supporting financial institutions in the financial market and giving them a sense that there is a backstop for them to immediately lend to businesses is a better way of thinking about this. And what we ought to be telling financial institutions is look at an applicant, and if they had a good credit score in January, we shouldn't assume that they're a bad credit risk today because of this lockup in commerce. Give them the loan for the operating capital they need right now, and then have the backstop of the federal government for when we come out of this on the other side.
So, Neil, get into the plumbing just a little bit with me here. As a practical, when you're saying we need something like by Monday, I think the House still isn't in session, are they? The Senate is, the House isn't. And we don't want 435 of them getting together in a room right now, do we? That's against all the guidelines from the president.
That's right, which means that what we need Congress to do is something that has maximum flexibility and that is pretty simple to enact and allow Treasury and the Fed and other federal agencies to basically build it as we go. And so our advice to Congress is, you're overthinking this. You're trying to make it too complicated. And the more complicated you make it, the longer it's going to take, and the more time will pass. And the more time that passes, the more layoffs are we going to have. So don't let the perfect be the enemy of the good here. Let's get help to employers, all of whom are members at the U.S. Chamber that we talk to want to do the right thing. They want to be able to keep their employees. But it's really hard to keep making payroll when you don't have any money coming in the door.
What do you see as the biggest hurdle right now to getting where we need to go as quickly as possible?
I think attempts by folks in Washington to micromanage it, to say, well, if we're going to provide some assistance, here are the 25 things that we want you to agree to do first or as a condition of that assistance. Every time you begin negotiating those or you begin implementing those, you're just making this harder and dragging it out longer. There is no perfect system here. There's no perfect answer, but the lack of action is going to be worse than if we do action and it's not perfect.
Neil, you do have the advantage of having so many members, businesses across the country. Can you give us any sense of who's hurting the worst, who might not be hurting quite as much, or is it just evenly distributed?
Well, it is not evenly distributed, but it's very difficult to find sectors that aren't hurting. I mean, you can certainly find individual companies based on kind of the profile of the business model who are not hurting, but you kind of go across sector from sector. We're seeing shutdowns in commerce kind of across the board, which is why as we think about an aid system here and a relief system, a bridge to get through this, that bridge has got to be open to all companies, irrespective of your size and irrespective of your industry.
So, Neil, one thing I've not heard you mention is any partisanship. Is this as bipartisan as what President Trump has said now, that in fact Republicans and Democrats are working together?
I think it will be at the end of the day, and I think it'll especially be bipartisan if we can keep it simple. And by keeping it simple and just providing the relief and avoiding kind of the traditional Republican versus Democrat fight, the truth is we don't have time for Republican versus Democrat fight. We have to get some things implemented now, realizing they won't be perfect, but so that we can get financial aid, some liquidity to employers so that they can keep folks on the payroll.
Okay, Neil, really appreciate your taking time out to be with us today. That's Neil Bradley. He is U.S. Chamber of Commerce Chief Policy Officer and Executive Vice President. And now we hear from Ritika Gupta for Bloomberg First Word News.
Thanks, David. The U.S. labor market is starting to feel the effect of the coronavirus outbreak. Applications for unemployment benefits rose by 70,000 last week. That's the biggest increase since the aftermath of Superstorm Sandy in 2012. The surge's jobless claims will almost certainly be dwarfed in upcoming weeks. The British government denies it's planning to confine residents of London to their homes. They also won't be prevented from leaving the city. Still, Prime Minister Boris Johnson did threaten to impose tighter restrictions to contain the spread of the coronavirus. India is taking more steps to contain the spread of the coronavirus. It's banning all international flights from landing in the country for a week starting Sunday. Plus, the Indian government asked states to enforce work from home for all private sector employees, an exception those in essential services. Hawaii Congresswoman Tulsi Gabbard is dropping her presidential bid. The Democrat has endorsed Joe Biden. That leaves Bernie Sanders as the only other major Democrat still in the race. Biden is building a commanding lead in the delegate count. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David?
Thanks so much, Ritika. Coming up, the chairman and CEO of EY joins us to tell us about what his business is doing and what his clients are doing in response to this crisis, what they need from Washington. Plus, we are, of course, waiting for that briefing on coronavirus from the White House. We will bring you that as soon as it begins. This is Bloomberg. This is Balance of Power. I'm David Weston. We are waiting now for that briefing from President Trump on the coronavirus and its task force. We're going to bring you that as soon as it begins. In the meantime, we want to turn to EY. It is one of the largest professional services firms in the world with over 285,000 employees in over 400 offices in about 150 countries. And we welcome now its chairman and CEO. He is Carmine Sibio, and he's joining us on the telephone. So, Mr. Sibio, thank you so much for joining us. I always like to start with CEOs about how your staff is doing with 285,000 people. How do you go about taking care of those people in the face of a pandemic?
Well, thanks, David, and thanks for having me on. Obviously, for us, this started back in China with our people in China, and we have over 25,000 people in China, and in all the large cities, including we had 200 people in Wuhan. And fortunately for us in China, we did a good job in terms of making sure that our people were safe. And believe it or not, to date, only one of our people actually got the virus in China. So now our offices in China are actually, people are going back to work. They're back they're about 85% of our people are back in the offices, back to work, and it's becoming a business as usual. But obviously from there, then with the spread, we've taken, I think, very, very proactive approach to protecting our people. We were one of the first firms to really announce travel restrictions, in particular to the different countries, including Japan, South Korea, and obviously China at the time, in terms of global travel. And then each one of our different countries and locations have put in, obviously now, stricter travel restrictions. So now where we are at is in many of our countries we have really infused work from home policies where our people should work and must work from home. There are still some countries where people have the option of working from home or not, but obviously everything has shifted towards really using technology. So I would say, David, we look at this in 4 stages. Stage 1 was really to just protect our people globally. Stage 2 is what I would say is a business shift, getting people to work from home, making sure that we're taking care of our clients. And stage 3 now is, how are we going to really help our clients working virtually? And it's really been amazing because we actually have had a lot of client interaction virtually where our clients do need our help in terms of just planning, in terms of planning their supply chains, what disruptions they're having. And stage 4 is, as we come out of this, as I mentioned before, China and Hong Kong are actually coming out of this, China in particular. So now we're going back into business as usual. So that's kind of how we've been planning this along the way. I really have to say our teams have done a terrific job in terms of working from home, taking care of our people as we go along.
So Carmine, because you are so massive and you have so many clients around the world, give us a sense. You have a unique access to a window sort of on where the biggest stress points are in the economy. We're mostly concerned about health and safety, but we also are concerned about the economy. Where are you seeing the most stress among your clients?
Yeah, so I would say probably one of the most serious areas in terms of stress. Obviously, each sector is different, and some of the sectors are going through major stress. But right now, in terms of really getting, and this is true across Europe and the U.S., is really around supply chains and making sure that the supply chains that are really needed to make essential goods are operating and operating well. So some of that was one of our conversations. You know, I sit on the Business Roundtable, and we did have a conversation with President Trump yesterday, and a lot of the companies there are worried because even in the U.S., as you know, localities, whether they're towns or states, you know, put in certain restrictions, it could restrict a supply chain of a company that's making a product that's you know, extremely necessary now. So those are some of the conversations we had. Right. We got to make sure that supply chains to making products that are needed now are in gear and operating, and there's nothing in their way. And I would say that's the same scenario in Europe as well.
I'm glad you brought up that Business Roundtable discussion. I won't ask you who said what, but I am curious to see in general, what were the messages given? You just said supply chains are a real priority. What were the other things that were communicated to the White House in terms of what is needed?
Well, there's actually, you know, the Business Roundtable really put out a letter to the White House in terms of what's needed, including providing financial support to individuals. Some of these, you know, protecting American jobs, you know, preserving business liquidity and viability, especially for small and medium-sized businesses. These are all, you know, and of course measures to support supply chains and critical infrastructure. These are all elaborated in a letter that was sent from the Business Roundtable to President Trump. But I would say the call itself was a very good call. Most of the CEOs, I would say all the CEOs, want to help, and they really want to get their companies in place to help. Whether that's, you know, manufacturing something that they don't typically manufacture, but could be helpful in this situation, converting certain plants to be able to make certain products that are more helpful here versus what they would typically make. It was a very good call from that perspective, and President Trump did a very good job in terms of really, you know, he wants ideas. He wants the CEOs to come up with ideas in terms of the economy, but also what's needed for their companies to continue to operate.
So, Mr. Sibio, talk to us a bit about EY as a business. I mean, this is a time that I suspect your clients need you more than ever. At the same time, a lot of them are going to be in a lot of financial stress. They may have trouble paying their bills. Some of them may even go bankrupt. How do you plan for that? How do you both address a larger need, but do you also, are you projecting a downturn for EY in your revenues?
Well, you know, we're going to be susceptible, obviously, to the overall economy at one level. We have some businesses overall that are more stationary, you know, they're more annuity-type businesses like our audit practice and so forth, and some that are going to be very, very dependent on companies, you know, spending money on projects and so forth. But in the short term, we actually have spent a lot of time with our clients helping them get through this, and that's everything from, you know, analyzing and looking at their supply chains to financial projections on things like cash and where they're going to be, to also helping them just operate using technology. This is something that we do very well, you know, in our business, and it's something that we've been prepared for and something that we've invested in over the years in terms of making sure we have the right technology, and we're really passing that on and those learnings on to our clients. So that's been very good. We are, like every other business, we're also doing projections in terms of, you know, worst case scenario to most probable scenario and so forth. You know, we're hopeful that this is more of a 3 to 6 month exercise versus anything longer, and you know, that's going to be important to our business as well. But so, you know, our business will slow over time because of the discretionary spend from our clients. Right. But that's not really what we're focused on right now. We're really just focused on helping our clients.
Well, of course, and that is the priority, and I know you do that day to day, but I wonder if you'd just spend a minute with me thinking out into the future a bit. How will your business be changed, specifically with respect to audit? Because I know you've audited in the past for things like business continuity, for crisis management issues. Will that be different going forward, having had this experience? And, for example, cybersecurity and working from home?
Yeah, so those are excellent questions, and obviously our audit practice, there's audit standards, so our standards would have to change for that to change. But when we talk about using technology, we've invested a lot in terms of using technology. So we do better quality audits as well as more efficient audits, and that's something we have a global platform called Canvas that we execute all our audits on. We're the only ones of the firm to really have that kind of platform. So we continue to invest. But you bring up a good point in terms of cybersecurity. This is something that we all worry about. And in these times, I do think our clients and everyone out there needs to be careful because the bad actors come out during these times. So we've been really advising clients to make sure that they continue to alert their employees around phishing, around malware, because these are times where we see those escalating, and it's something that obviously we're doing for ourselves as well.
Okay, really appreciate you spending time with us today. I know it's awfully busy for you. That's the EY Chairman and CEO, Carmine Sibio. Still ahead, we're waiting for that daily press briefing from President Trump and his virus task force. And we're going to be bringing that to you just as soon as it begins. This is Bloomberg. This is Balance of Power. I'm David Weston. We are still waiting for that news conference with President Trump and his coronavirus task force at the White House. We will bring you that just as soon as it begins. But in the meantime, we really need to check in with the markets. And I'm happy to see you at the moment, Kaylee. I must say, the equity markets, all of a sudden, they've gone up.
Well, don't speak too soon because we've been fluctuating through these gains and losses for the entire session. And I will say, while we are up only by about 0.9%, and at that level, that is the smallest move we will have seen in the entire month of March. So these are really kind of unremarkable moves, considering we're used to swings of 5+% in equities at the moment. But I think what you're seeing is a market who knows it's getting a lot of stimulus from central banks, with the ECB coming in, from the Trump administration, governments really around the world. But also the bias is still kind of lower as we continue to get data out this morning, like jobless claims rising more than expected, the Philly Fed index dropping the most on record. And there's still a lot of uncertainty and concerns about the economy.
And the jobless may be just a taste of what's to come. But you make a very powerful point. Maybe more important than whether it's up or down is it's not moving as much.
Right. Well, and interesting because it's doing so on more volume. Volume is actually about 15% above the average for the past 20 days. And we know the past 20 days have really been quite volatile. So the fact that volume is up, but we're not seeing gains of any large magnitude and aren't really finding any direction just tells me that investors aren't really sure if they want to put their money in or out of this equity market right now.
Thank you so much, Kayla Lyons. Always great to have you here, and particularly when the markets are up. Okay, coming up here, we're going to head to Washington for the latest on the negotiations over fiscal stimulus. We're also waiting for President Trump to give his daily update with his coronavirus task force, with reports that he may indicate a widening range of treatments to be approved by the FDA for the coronavirus. We'll find out shortly. We'll bring it to you. This is Bloomberg. From New York, this is Balance of Power. I'm David Weston. For Bloomberg First Word News, we go now to Ritika Gupta.
Thanks, David. Treasury Secretary Steven Mnuchin wants direct payments of $1,000 per adult and $500 per child in a stimulus plan. He told Fox Business that President Trump is determined to give support to those affected by the coronavirus outbreak. The White House is seeking a total of $1.3 trillion. Airlines and other struggling businesses would also get assistance. Mnuchin also says it's a good time to take advantage of the collapse in oil prices. He'll urge President Trump to ask Congress for a $20 billion to fill up the Strategic Petroleum Reserve. The president already told the Energy Department to buy 77 million barrels of American-produced oil. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David.
Thanks so much, Ritika. We're just moments away now from that presidential briefing at the White House on the coronavirus with his task force. And so while we wait for that, let's turn to our chief Washington correspondent, Kevin Cirilli. He is in Washington. What do we expect to hear today? This has turned into a daily occurrence now, Kevin.
Yeah, precisely. And President Trump, I'm told we have a 2-minute warning, less than that now, for the president to begin addressing. It comes at a time in which they are continuing to rally support for the $1.3 trillion economic stimulus bill. It also comes at a time in which he signed last evening the second round of the free coronavirus testing, as well as 2 weeks of paid leave. Up on Capitol Hill, I'm told by sources in both the Republican and the Democratic parties that they are all being told to be virtually on standby as it relates to phase 3 of that $1.3 trillion deal that would immediately provide some liquidity, some direct financing for Americans as early as April 6th, a second round scheduled for mid-May, David.